started. Good morning. This is Charlene Riley. It is Monday, September 4th, 2017, 9:55 a.m. Eastern Time. And this morning I am recording my pre-trade setup, my pre-trading routine. So the first thing I always do when I get ready to trade is do a self-check. Okay, so I'm physically feeling good. My mindset is okay. I've had my morning prayer and meditation, and I'm on my second cup of coffee, so I am ready to go. One of the first things I do is look at my trading plan to go over my mindset and discipline commandments, remembering to stop trading after 3 consecutive losses. Preferably, I don't have 3 consecutive losses. I trade actively. No, just set it and forget it. No emotional or revenge trading. And if I feel like I'm doing that, then I'm going to just walk away for a while so I can calm down. Don't force trades. Don't get into trades when the market is really saying now's not a good time, which was a little difficult to get out of, because in trying to do assignments for prep school and early in university, you just tried to do trades whenever so that you could complete the assignments. But we're in serious business now, so no forcing the trades. I do have a good plan, and I have to trust it. Don't trade when I'm getting mixed signals. When in doubt, sit it out. Be patient. Protect those pips. Plan every trade. And don't jump into trades without planning them. And remember to be focused and disciplined. These are areas that I've been working on and seem to be doing better with them, and can honestly acknowledge when I mess up. So the next thing I need to do is confirm my pairs, which are the USD JPY and the British Pound USD. And I get distracted. The British Pound USD, the USD JPY, the USD Swiss franc, and the Australian New Zealand pairs. Those are the pairs, after talking with my coaches about the times that I'm able to trade and getting a few things squared away in my mind, in terms of first thinking I could only trade certain pairs during certain markets. These are the pairs that I found that I've had the best success with. So these are the pairs that I'm going with. Now the next thing I want to do is check out what I can risk for today. So I created this spreadsheet that, and what I do is I log what my account balance is, and knowing that I have a daily risk threshold of 2%. And when I did the calculations, I can actually risk up to a total of, I can have a lot size of up to 25 cents per pip. But in actuality, since so when I did the calculation, my risk ratio per trade would, based on the $1,000 account, was $5, and with a stop loss of 20 pips and a micro lot size of 10 cents, it's actually telling me that I can have a pip value as high as 25 cents a pip. So, but since it doesn't allow 25 cents, I set it at 20 cents per pip. So when I go to my spreadsheet, I can, based on my account size, I know what my 2% daily risk threshold is, the maximum number of pips I can risk per day, with a 10 cents or a 20 cent lot size. My max risk per trade is 0.5%. So, and I have that calculated, and it's always calculated based on my current account balance. And then the maximum number of pips per trade that I can make. So with that, I'm going to put today's date in and check my account balance, which is $986.36. So I put that in, 986.36. And it tells me that for this account balance, I have a 2% daily risk threshold of 1973, which translates into a max number of pips of 197 for a 10 cents lot size, or 99 pips for a 20 cents lot size. And maximum risk per trade is $4.93, which is 50 pips, 49 pips per trade on a 10 cents lot size, and a 25 pips per trade on a 20 cents lot size. So I'm primarily using the 20 cents lot size, so I can risk a max of 25 pips per trade today. Now the next thing I want to do is check out my trading journal. I keep a journal in Word that goes, I take the screenshots of my trades and jot down all the pertinent information. And I see one of the biggest questions I had, because I've had a losing streak. I've had more losses than wins lately, and so I'm going back. What signals? I'm trying to follow my plan, but I'm like, well, what signals have I been missing? And so that has caused me to do a lot of reviewing my trades and my plans, and working to tweak my plan. And one of the things that I observed in my last few trades, well, actually, as I went over all of them, is that I was relying more on the stochastic and less on candlestick patterns. So my last note to myself was to focus more on candlestick patterns instead of solely relying on the stochastic for confirmation. So, and that seems to have helped quite a bit. I went back over my candlestick patterns, and so I could have that. Now the next thing to do is go to my FX book, and I see that the London and New York markets are currently open. London closes in little less than 2 hours, and New York has a little less than 7 hours to go. A low impact report just came out for Denmark, and then I'm seeing that for today, you had two medium impact European reports early this morning, but nothing's really going on right now. Early British Great Britain report, but nothing's really going on right now, and nothing really until much later on today. So we're okay for the economic calendar. Now, if I go back and look at my portfolio, and I see that, and this shows how I've had some ups and downs, but I think that I'm back on the right track now by doing daily, by reviewing daily. I think that I've isolated where I was going wrong. I keep track of all my trades, and I know when I follow the plan. So, like for instance, the green is follow the plan, red is did not follow my plan, yellow is where I made a mistake, like hitting the wrong button. My mouse had been acting up. I had to get a new mouse. And then there are a couple of cases where I partially followed my plan. And so I try to be brutally honest with myself because I want to be successful with this. So, and even though I see all of this pink, which is hitting stop loss, there were instances where I did the trail and stop. So to protect my pips, and here are two instances where I did that. So now I'm ready to go into MT4 and get started. Let's see. Since London market is open and British Pound USD is one of my pairs, this is where I'm going to start. Let's get a clean slate here. And to do that, I go to my GGFX demo template, and I made this writing a part of my template so that just to save a little bit of time in terms of labeling my charts. Labeling the charts actually helps me in taking my screen prints for my trading journal. So that was a good thing that I learned during all the way back in prep school. So this is what I will continue to do. So having a clean slate, let me first mark that this is the British Pound USD. And I've already plotted my risk-reward ratio at 1:1, and I have a pip value of 20 cents per pip. So to start with my technical analysis, I go to the daily chart. I do my analysis on the daily the 4-hour, and then the 1-hour, and then I jump over to the 15-minute chart, which is where I execute my trades. So when I go to the daily chart, I see that the market had been in an uptrend over the last couple of months, and then downtrend in the month of August, but and then has been in consolidation over the last few days. So the first thing I want to do is mark the highs and lows. And I color coordinate my lines so I know where my support and resistance lines, so I know where they came from. So the orange is from the daily chart, the blue is from the 4-hour chart, the magenta is from the 1-hour chart, and then if I add any on the 15-minute chart, then that's where I would make them in purple. So my overall strategy, my primary strategy is support and resistance, breakthroughs of support and resistance lines. And I do that through support and resistance lines that I've drawn, as well as the Fibonacci lines. But so far on the daily chart, what I do is log the high and the low, and then also mark where the market has been for the last week or so. So now I have an idea of where the market has been ranging. Now keep in mind this this consolidation, but also this seems to have been moving in a tight range here. So now when I go over to look at the 4-hour chart, I see the downtrend, the bearish sentiment and the consolidation that I was seeing on the daily chart. So I see a good line of support here. And this is a blue line because it's on the 4-hour chart. And I also a good line right there. And when I go over to the 1-hour chart, again, I see this consolidation that was evident in the that we also saw in the daily and the 4-hour charts. And I see the lows here, but the market really hasn't been near there in a few days, so I'm not going to worry about down here. So now I'll go over to my 15-minute chart, which is where I will draw my Fibonacci lines. And just looking to see, because I see the this line from the daily chart. So right now I'm ready to plot my Fibonacci lines and some fresh Fibonacci lines going from the high down to the low. Let's see, this is a good line right here. 1, 2, 3, 4, 5, 6, 7, 8. So that's a good line there. Still a little off. Hmm. Hmm. Okay. 1, 2, 3, 4, 5, 6, 7. Okay, so we're going to go with this placement right here. So now that we have our Fibonacci lines drawn, now I'm going to check to see if any are missing or if I need to add any others. But it looks pretty good. So that's my multi-frame analysis. I'm seeing that there have been a good downtrend, followed by an uptrend. We've been in consolidation. I just missed some pips, but we are now about ready to trade the current trend. I'd call that, we just broke out of consolidation. So I'm going to call the major trend a downtrend. And then call the current trend I'm still going to call that consolidation. Now, again, my primary strategy is the breakthrough of support and resistance lines. And then for confirmation, I use one of the technical indicators, usually the stochastic oscillator, but I also can use candlesticks and candlestick patterns or market volume for my confirmations. So, for instance, right now, if I were the trade setups that I'd be looking for right now would be either a confirmed break below this 1.29459, and I'd enter into a sell, or a break above this 1.29497 line, which would get me to enter into a buy. Now, when I add my stochastic oscillator, then I see that the stochastic is below 20, so it's entering into the oversold region. So it looks like you'd probably be expecting a reversal. In the near future. So, but that is my trade, my normal starting routine.